Let's say you have a rental property.
When we're talking taxes, there's two types of rentals you can buy. There is long-term rentals and there are short-term rentals.
Am I a real estate professional?
Right now? Not many people out there are probably going to qualify as a real estate professional.
He's right. Real estate professional means you work in a qualified real estate professional activity. It's got to be in your own business. You got to be over a 5% shareholder. It doesn't work if you're just a W-2 employee.
Hopefully that is clear.
Welcome to this episode of the Hidden Money Podcast. We are covering short-term rentals, frequently asked questions, some of the more common things that Kevin and I get asked. And this one comes up all the time. And hopefully from now on, we're going to make such a clear, crystal clear episode on the difference between real estate professionals, material participation, especially as it pertains to short-term rentals. Kevin, if you're trying to get the short-term rental loophole, does rep mean anything?
No. Goodbye, everybody. No.
There you have it. That's the end of this episode. Clear, crystal clear.
I cannot be more clear. So everyone always gets this confused is because real estate professional rules have been around longer than short-term rentals have. Short-term rentals weren't a thing in the 90s. I mean, they were, the Augusta rule and all that kind of stuff a little bit. But as far as Airbnb and Verbo, that is when the short-term real estate kind of really started getting out there.
Yeah.
But real estate professional has been around a while. So now
most Tax Act.
Yeah, so most CPAs are trained, most people are trained that when you buy real estate for tax purposes, real estate professional is a thing I have to utilize in order to use my rental property to offset my income. Not the case with short-term rentals. So there's more than two types of rental properties you can buy. Obviously there's midterm, long-term, short-term, but when we're talking taxes, there's two types of rentals you can buy.
Yeah.
There is long-term rentals and there are short-term rentals. Short-term rentals are defined as your average lease time of 7 days or less per tenant. Then long-term rentals is anything above that. Your midterms, if you rent your property out every 3 weeks, on a monthly basis, a yearly basis, long-term rentals.
Let me just put in one teeny tiny exception that applies like 1 out of 200, right? He's right. 99.9% of the time, or 99.5% if it's 1 out of 200. See, I can do math still. There is the midterm rule, the bed and breakfast rule. And that is if your rental, and it's considered as it's basically operating and running a bed and breakfast where your guests stay for 30 days or less, more than 7 days, but 30 days or less on average, and you perform significant personal services. And here's the reason why I wanted to bring that out, because I hear there's a couple podcasters out here that do real estate that says you have to provide significant personal services to qualify as a material participant. We're going to get into material participation here more in a second. That's not true, unless it's a 30-day rental. So that we have those midterms, but 99.5% to be exact, or close enough, of the time there's two kinds of rentals.
Yeah, and so when you have short-term and long-term rental properties, they both, when you buy them, they both default to passive classification. The goal is, hopefully, we're going to move these rental properties from passive to active, because that's where the majority of probably your tax liability is your W-2 or your business income, which is active income. So the way you move long-term rental properties to active classification, two things: real estate professional, 750 hours a year and over half your working time in real estate. Then you must materially participate in those properties. Being a real estate professional does not magically just make your rental properties active. You still have to manage them materially. The second, short-term rentals, there's ways to move short-term rentals from passive to active. You need one thing, and it is not real estate professional. Material participation is all you need to move short-term from passive to active, which makes this short-term rental strategy so nice, is because you could be a W-2 CPA, you could be a financial advisor, you could be a fireman, you could be, it doesn't matter what your vocation is. Real estate professional does not matter for short-term rental properties. And you can move it from passive to active and tax plan against your teacher income.
Yeah.
You could tax plan against your CPA income, doesn't matter. With short-term real estate, so long as I am materially participating on the short-term rental property. Hopefully that is clear.
we're going to work on it a little bit more just in case, because I think it's clear to you and me, because we see it every single day and answer this question 10, 20 times a day. So let's go through a few scenarios and examples. First one is, and I see this a lot of times, we have realtors come in who own a short-term rental. And their realtor, they're 1099, so they do qualify as real estate professionals, but they have someone else managing their short-term rental, in a different state. They're like, I get to take all the deductions, right? I'm a real estate professional. Do you materially participate in that short-term rental? No, but I'm a real estate professional. Sorry, you don't. You got to materially participate in a short-term rental because I have an average lease length of 7 days or less. So it is not considered a real estate professional activity or qualified real estate professional activity. The only way your real estate professional service would help you is if it was a qualified real estate professional activity. But even if it was an 8-day rental, there are some of those I've seen that have average of 8 days. I'm like,
why?
Just pick short-term or long-term, come on. But there are those. If it was an 8-day rental, then your real estate professional would help you. And if you're materially participating in your real estate firm as a contractor, then you got a chance, a really good chance. But if it's 7 days or less, we did have one client that was exact. And he's like, but man, I want to use this. And I said, well, why don't you rent it for a month? And it was like October. And he did. He got a month rental. And now all of a sudden, his average rental went from like 5 to 8.3 or something. Boom, we got it. So, I mean, you just got to understand the difference between real estate professional and short-term rental. Now, we do have real estate professionals that also have short-term rentals and long-term rentals. And then we have people that have short-term rentals they want to grow and long-term rentals they want to qualify as a real estate professional. Can you talk about that a little bit?
Yeah, and I'll give you the kind of more broad common answer, because I know there's always that 0.5%. But from the majority of people out there.
Why are you looking at me like that when you say that?
Because I know how you work. In your brain, you're like, but there's also an exception.
There always
there's
are
an
exceptions, yes.
But generally, how this works is you're going to treat your short-term rental as a separate trader business, not associated with any of your long-term rentals. Your material participation and rep status is all going to account for all your long-term rental holdings. But when we're talking about your short-term rental properties, I cannot group your short-term rental with your long-term rental for material participation purposes. They are two distinct groups. So you must materially participate and be a rep on your long-term if you want a tax plan, and also materially participate individually for that short-term rental property. And I can't group them. So they are in two different buckets. So you're going to have to really keep track of your time. Timekeeping, and we have podcasts on material participation, timekeeping.
Yes.
So you have the devil's in the details with this. You got to track your time by property to prove, because the burden of proof is on you.
Yep.
You have to prove you're materially participating on your short-term rentals and your long-term if you have them.
But when you're doing this, and we have clients successfully do it, we help them do it every year. But when you're doing this, you better be careful, because let's say you start getting too many short-term rentals, and suddenly you're spending more time on your short-term rentals than your long-term rentals. Like Kevin said, there's two qualifications to qualify as a real estate professional. One, you spend at least 750 hours a year. That's just under 15 hours a week.
And could be like your real estate. You could be a real estate broker. You could be you could be in construction.
Yeah, there's a lot of
be
things.
A roofer.
Yes.
That's all qualified real estate.
So you have to be 750 hours in a qualified real estate professional activity during the tax year, and you have to spend more time on qualified real estate professional activities than you do any other professional activity. So if you spend 900 hours on your qualified real estate professional activities, and you spend 1,000 hours on your short-term rental, bam, that year you can't qualify as a real estate professional. So it takes active strategizing and monitoring, and that's the name of planning, tax planning.
And we preach on this every single episode, and we need to, because every situation is different. Not many people out there are probably going to qualify as a real estate professional. It is a very popular vocation to be, a real estate agent or to be in some sort of real estate, but the majority of our clients are not real estate professional. So this is it's a topic we hear a lot, just because some people just automatically associate real estate professional with real estate, all real estate, and they group it all and they just do this blanket coverage of all real estate has to be through this lens of real estate professional.
There's even a lot of CPAs that do that.
Oh yeah, it is annoying. It is very
so
annoying.
annoying.
It is very annoying.
And IRS agents too, yeah.
Yes, and so That is what if you take anything away, just know that no matter what your vocation is, I don't care who you are or what you do, you can tax plan with short-term real estate. If you buy long-term real estate, you have to be a rep and manage it. So that's the big distinction. And if you own a combination of the two classes, that is where you really need to have a strategy laid out and documentation, and we'll guide you through that.
Yeah. Back in the real estate professional. So prospects, I hear this all the time. Oh, I've got a real estate license, a realtor license. Am I a real estate professional?
Right now? That was easy. No.
No. I'm studying for and taking the test to become a qualified realtor and certified. That counts as qualified real estate activities that year, but only for that year. Once you have a license, it doesn't make a difference. What are some other common misconceptions? I know there's a bunch because we get asked these all the time. Let's try to get these out.
That's the biggest one I get is like, oh, I gotta sit and do all the brokerage and the real estate license. I'm like, no, it's the IRS is not wanting a license. They're wanting time in the real estate industry. What I find unique is that real estate professional is it's broader than you would think. It's because it's not just real estate agents or lenders or anything like that.
Excavators.
Yeah.
An excavator whose sole job or most of the job is just moving land, doing dirt work.
Yeah, land improvements. If you are there to construct, rehab, build, manage, lease, sell, buy real estate as a profession, that's probably a qualified real estate professional activity.
Not mortgage brokering, though.
Not mortgage broker.
Yeah. I think at one point there was. I can't remember, though. That was actually maybe before my time. I'm not sure.
I have a roofer that qualifies because he repairs real estate, residential real estate. So you could be a roofer. You could be. I've even done research on a plumber. I mean, they go to do house calls. They improve residential real estate, the actual infrastructure of the real estate. They set up plumbing in new homes. They do all this other stuff.
Some can and some can't. Just because you're a plumber, don't think you're a real estate professional.
No,
it's
personalized.
very detailed.
Yeah. So it's very broad. It's deeper than what you think, but it's also not needed as much if you buy short term. It's not needed at all, but it's not needed as much anymore with the blowing up of Airbnb and VRBOs. So.
Absolutely. I had another good point on these things. Let's say you have a rental property that some years you do 30-day leases on it, and some years you turn it back into a short-term rental. Is it a real estate professional property or is it a short-term rental property?
I mean, you go by the days of that tax year. You go by the fact pattern of how many.
It's a year-by-year test, right?
In that time period. So here's a cool trick that we often do with our clients is they want to utilize the short-term rental. Mm-hmm. They want to offset their active income by buying real estate, but they're really not good at owning short-term real estate. They don't want the day-to-day grind. They don't want to have the liability of all these people coming in and out of the property and tearing it up. You don't know who's there. So we buy the short-term rental in year one. You materially participate and we take the deduction. But then because we can't go in with the intent of transitioning it, but we are going to go in saying, hey, we tried the short-term rental thing. We did the tax deduction. We did everything by the letter of the law. We got the deduction on the short-term rental.
The original economic intent was to buy it as a short-term rental, but then they realized they sucked at it.
We're like, hey, I don't want an STR anymore. Instead, I'm going to transition this to a long-term rental. I'm going to get a year-long tenant in this thing.
Yep.
You've captured the deduction in the first year. But then you get the benefit of the steady income and low hassle of the long-term rental in the next year or the following 2 years, however long you try to make this short-term rental work, then you kind of get the best of both worlds and it doesn't trigger tax. Changing it from a classification from a short-term rental to a long-term rental, or even we've seen a short-term rental go to a primary residence. You buy a short-term rental, take the deduction on it, and then maybe a few years down the line, you love it so much you move there. Mm-hmm. That is not a taxable event for you to trigger tax. That is not an event where you're going to just change the classification and its income.
Again, this is all generally speaking. And again, what matters is IRS has found people that are basically committing fraud. They're like, I'm going to buy this. It's a long-term rental. I'm buying it in December. I'm just going to short-term rent it just to get the loophole and then turn it into a long-term rental January 1st. The IRS has caught people doing that and they beat them on those, even though technically by law, the 7 days or less than not. It was the original economic intent, and they make the substance over form argument. But again, if that's your intent, and we've had clients all the time say, I think I want it as a short-term rental, but I don't know if it's going to make money. Or the other way around. I think we want it as a long-term rental, but I'm not sure if it's going to cash flow enough, but we want to try it a couple years. That is reasonable. People do that all the time. So let me summarize this again, and we're done. Everyone who's watched this hopefully knows the difference between short-term rentals, material participation, and real estate professional. Real estate professional means you work in a qualified real estate professional activity. It's got to be in your own business. You got to be over a 5% shareholder. It doesn't work if you're just a W-2 employee. And you spend 750 hours a year or more during the year, tax year, and you spend more time on qualified real estate professional activities than all your other professional activities. It does not apply to short-term rentals. In most cases, it has no bearing on short-term rentals. That's just the real estate professional. Material participation applies both to real estate professionals and short-term rentals, but for STRs, the only thing you care about is material participation. If you hit material participation, please go refer back to that episode on the Hidden Money podcast. If you qualify as a material participant, it is an active trade or business to you. If you don't qualify, it's a passive. That's the difference. That's what matters. Hope that helps. Thank you for tuning in. Please join us next week on the Hidden Money podcast.